Hi, welcome everyone today to this lunch with Mia about life insurance from the Maryland Insurance Administration. My name is Patricia Dorn, and I'm going to be giving the presentation to you today. Just a few little housekeeping notes. Feel free to ask me questions at any point during the presentation by using the chat box. So you're going to find that probably at the bottom of your screen. It says chat. And if you can go ahead and leave it set to everyone. So you should be sending your question to everyone. I will have a Q&A session at the end. But if I see your question come in and it's relevant to what I'm speaking to at the time, I'll probably just take your question in that moment. But just go ahead, utilize that chat box for the questions. You did see the note that this is being recorded, so that is an FYI to you. This presentation is recorded and also means you can review it later if you would like. And so with that, I am going to go ahead and get started today. This is life insurance. I'm with the Consumer Education and Advocacy Unit of the Maryland Insurance Administration. So the agenda today, I'm going to give you an introduction to the Maryland Insurance Administration, which is my way of saying, that's the entity that I work for. Why am I here talking to you about life insurance? And you'll understand if you understand who we are. We're going to talk about types of life insurance, some FAQs that we get, frequently asked questions about life insurance, some shopping tips, a little bit about something called viatical settlements, finding a missing life insurance policy, and then we'll talk about some additional resources. Next slide. All right, so the Maryland Insurance Administration, we are the Maryland state agency that regulates insurance in Maryland. That's kind of confusing explanation by itself. So what that means is we license those insurance companies to sell their products in Maryland, and we also license the producers. So the producers, those are your agents and your brokers, the people that sell you the insurance products, although you can also buy them directly from insurance companies in many cases. We are the entity that makes sure that the rates that are charged are not excessive, but that they're also not inadequate, right? We're making sure that the insurance companies are going to have money to pay the claims in the future. Okay. So we're making sure that they're collecting enough money to pay your claims in the future, but that they're not excessive or unfairly discriminatory. We monitor the solvency of the insurers. So we're also making sure that they're going to have money to pay your claims in the future. We investigate consumer, so that's you. We investigate your complaints about insurance companies as well as the agents and the brokers. So if you have a complaint, you can file it with us and we will investigate. Next slide, please. All right, so if you feel that your insurer or your insurance producer, remember that's your agent or your broker, has acted improperly, you have the right to file a complaint with us. So these are just some examples of improper actions. If you believe that they're improperly denying or delaying payment of all or a portion of a claim, if you believe that they've improperly terminated your insurance policy, so canceled it, if you believe that they've raised your insurance premiums without proper notice, or have made false statements to you in connection with the sale of insurance, or a false statement to you in the processing of an insurance claim, or if you believe they're overcharging you for services, and that includes premium finance charges. So that's who we are and what we do and why I'm here talking to you about life insurance today, because you can file your complaints about insurance with us. And that means all kinds of insurance. It's not just life insurance, but that's going to be your auto insurance. It can be renters, homeowners, etc. So let's get started talking about life insurance. So many people purchase life insurance to provide security for themselves and their loved ones. So that's generally why people are purchasing life insurance. There are people who purchase life insurance for complex investment reasons that we will not touch on today, but for the most part, it's to provide that security for yourself and your loved ones. Your need for life insurance varies with your age and your financial responsibilities. So your need for life insurance, at one stage in your life will not be the same in many cases as it will be 20 years later. it changes. It needs to be adjusted accordingly. All life insurance policies are not the same. Some provide coverage for your lifetime, and others cover you for a specific number of years. And I'll get into more details about that. Some build up a cash value, some don't. Over here on the right-hand side is our consumer guide to life insurance. You can download that from our webpage at insurance.maryland.gov, or you can call us if you would prefer a hard copy. We are happy to snail mail you a copy as well. Next slide, please. All right, so first we're going to talk about term life insurance. Term life insurance covers you for a term, okay? That term is 1 or more years. Okay, it's generally not 1 year. It's usually 10, 20, 30, or, possibly while you have your job, if you're getting it through your work. It pays a death benefit only if you die during the term. So with term life insurance, it only pays that death benefit if you die during the term. Term insurance generally offers you the largest insurance protection for your premium dollar. So what that means is you get the most amount of life insurance, usually, for the premium that you're paying. And that is because it does not build up cash value to use in the future. Generally, term insurance offers lower premiums in early years, but the premiums may increase as you get older. So you're younger and you're less expensive to insure. And such, the premiums are lower, but the premiums may increase as you get older. However, in many cases with a term life insurance policy, you're going to lock in a rate. Say you lock it in for 10 years, 20 years, 30 years. If you're getting your term life insurance policy through work, you're likely to see little increments in what you pay from year to year. Next slide. Permanent life insurance, okay? This includes universal, variable universal, and whole life. I think some people, whole life is kind of synonymous with permanent life insurance. It's the most common example of permanent life insurance, but under the umbrella of permanent life insurance, you're going to find universal life, variable universal life, and whole life, as well as some others. These provide long-term financial protection. So that means basically you can keep this for your entire life. The policy includes a death benefit and in some cases, cash savings. And what I will say is in almost all cases, there's going to be a cash savings component to permanent life insurance product. All right, so let's narrow it down and let's talk about the different kinds of permanent life insurance. Whole life. With a whole life insurance product, you get fixed premium payments. So meaning they're going to stay the same. Guaranteed death benefit and cash value growth. With universal life, premium payments might be flexible or fixed. Okay, so it might be that you're choosing, or you have the ability to make some changes with regards to what you're paying every month, or it's fixed. It provides a guaranteed death benefit as long as the policy is in effect, and a minimum guaranteed interest rate is credited to your cash value. Next slide. All right, another kind. Indexed universal life. So like universal life, the premium payments may be flexible or fixed, and the death benefit is guaranteed as long as the policy is in effect. Interest credited to the cash value, though, is linked to an external index, such as S&P 500. It could be linked to other external indexes, but what they're telling you is how much did the S&P 500 make this year or this month, right? That's what you're going to be credited. Variable universal life is a category of universal life that offers flexible or fixed premiums, but the cash value is tied to the performance of one or more investment accounts, similar to mutual funds. So as you can see, this is just kind of getting more complicated. And if these are products that you're interested in, you need to think about what you're comfortable with. Do you understand this product? And are you comfortable making the decisions that need to be made? Or is this something a little bit simpler, better for you? Because number one, maybe you're not really understanding the products, or maybe you just don't want to take the time to make the decisions that you might have to make with some of the more complicated life insurance products. So with the variable universal life, you can choose your investments. Okay, is variable universal life for you? Are you comfortable choosing your own investments? As with any investment product, the value of your investment might vary over time. It will vary over time, and may in turn cause the death benefit and the cash value to increase or decrease. So it's a more complicated product. Next slide, please. We do have a consumer advisory for universal life insurance. So again, flexible or fixed premium, you're going to choose the premium that you pay, although there's likely going to be a minimum required premium. Part of the premium that you're paying is going to pay for the expense charges. So the cost of the life insurance. So part of the premium goes to the cost of the life insurance in the same way that it would if you were buying term life insurance. And then the rest of that premium is going to the cash value. So the cash value earns interest. This interest rate will be equal or more than the guaranteed interest rate stated in the policy. Next slide, please. All expense charges, such as the cost of insurance charges and the surrender charges, will be stated in your policy. So this is where I think you really need to focus if you're interested in these more complicated life insurance products, which make perfect sense for certain people and are, terrible decisions for others. As you get older, the cost of your insurance increases. Okay, so maybe when you're 30, let's just say, for example, the cost of insurance in your policy when you're 30 years old is $50 a month. Just as an example, okay? And now you're 50 and maybe it's $150 a month. Okay, so the insurance part, the expense part that doesn't go into the cash value is increasing. If your planned premium is not enough to cover the monthly deductions, the additional premiums will be required to keep your policy in force. Next slide. So this is what that means. If you purchased it at 30 and your expense is 50, but you're paying $100 a month, right? You got that $50 and it's getting set aside to the cash value and it's growing, etc. But if you never adjusted your premium to keep up with the cost of your insurance, you might find yourself 20 years later, if it's now $150 for the expense and I'm still only paying $100 for my premium, they're going to start drawing down my cash value to make up the difference. That's going to be stated in the contract that's how that's going to work. It's really important to stay on top of any mailings, etc., that you get so you can understand this and actually kind of see this happening. So if you bought your policy a while ago, you may have selected an amount of premium that made sense for you at the time. Now, again, interest rates are involved, etc. Things change. The interest rate 20 years ago might not be the same as it is now. It might be better. It might be worse. What they showed you was going to work 20 years out, it might not be reality anymore based on interest rates, based on how much you've made from the investments that you've chosen, etc. It is important with these insurance products to stay on top of it, to understand what are my expense charges, how much of my premium is going into my cash value, what is my cash value, are they drawing down my cash value? Because people can get themselves in trouble in these situations. What can happen is essentially, if you're not paying attention, and that cash value is being drawn down, eventually there isn't going to be any cash. And you're going to have to be paying that entire premium again. So if you, at 50 years old, they were taking an extra $50 a month from your cash value, and suddenly 5 years later, there is no cash value, and maybe your expenses are $200 a month now, that's what you're going to have to start paying in order to keep this policy in force. And what ends up happening is that people simply cannot afford that premium. They haven't planned for it. They didn't see it coming. They weren't paying attention to the fact that their cash value was being drawn down. And now they end up in a situation where they can't afford to keep their policy in force. And that is our warning to you, that these products are complicated. Make sure that you stay on top of it if you want to go into one of the more complicated life insurance products. So sometimes people will reduce the death benefit in order to keep the product in force. You don't want to have to get into that situation. You know, you chose the death benefit that you wanted and the one that made sense for you. Again, consult an advisor, etc. You know, if you're looking at these products and you have any questions, etc. I do have a question in the chat. Is that why the rate chart? That's why on the rate chart, the premiums change at a certain age. Yeah, I mean, that's great if they're showing you that the premiums are changing at a certain age with these whole life or permanent life insurance, universal life insurance products, etc. All right, next slide. Sorry, tried to move the slides myself. All right, any questions on that? I know it can be complicated. You can shoot me an email if you have any questions. I'm going to go ahead and put my email right now in the chat if anybody wants to just grab it and have it and set it aside. All right, so I'm going to get into some frequently asked questions. Oh, these are the stranger questions. Yes, because we do get these a lot. Latia, does that go also for whole life? I mean, the idea is that the expense, so it's the same for each product, right? Be it term or be it permanent. It costs more to insure us, life insurance wise, as we age. That's going to be the same for term, and it's going to be the same for whole life. Whether or not that affects our premiums is going to depend on the product itself. If you're buying one of those term life insurance products where you could just lock in 30 years, you're just going to see yourself paying the same amount of money every month for 30 years. However, if you need to renew it for another 10 or whatever, you're probably going to see a bump. And then for the whole life, I mean, yes, the cost of insurance is going to increase yearly, but how that's reflected in your premiums is going to be different from insurance product to insurance product. Can someone else take out a policy on my life? Yep, but a stranger cannot buy a policy to insure your life in Maryland. And I think some of you might think it's a weird concept that a stranger even could in any sense, but in some states it is legal. So here we're telling you that it's not legal in Maryland. That's not something that you need to be concerned about. Next slide. What conditions must be met before someone can take out a policy on your life? In general, the person whose life is to be insured must be legally competent to enter a contract and apply for or consent in writing to the policy. So usually legally competent to enter a contract, and you've applied for it or you've consented to it. But there are exceptions to that. Next slide. The benefits have to be payable to you, your personal representative, or someone who has an insurable interest in your life, unless the policy is purchased by a charitable, benevolent, educational, governmental, or qualified religious institution, or a qualified trust for the benefit of such an institution. If the policy is to be purchased by one of the listed types of entities, you or your legal representative must designate the entity as the irrevocable beneficiary of the insurance policy. Okay, probably this isn't super relevant to anyone who's here now, but if it becomes so, you know where to find the information. An insurable interest is required to obtain a life insurance policy on another. Next slide. Oh, all right, it is. When can someone buy a policy on my life without my consent or without me signing the application? Who can do that? Your spouse can do that. If you lack the legal capacity to consent to life insurance and the person purchasing the policy has an insurable interest in your life, then they can also do that. If a parent, a step-parent, or a spouse is purchasing a family policy that insures 2 or more family members, or that person to be insured is a minor, and the purchaser either has an insurable interest in the life of the minor, or the minor is dependent upon that person for support and maintenance. And again, these are frequently asked questions, FYI, maybe not information you need now, but you know where to find it if you do need it. Next slide. So I keep throwing out insurable interest. What is it? People with an insurable interest in your life generally include you and individuals closely related to you by blood or law, such as a spouse or children. But others, such as your employer or business partner, might also have an insurable interest in your life. So this would be especially relevant, if you had an important position at a corporation of any kind, but for the most part, a small company, etc., your talents are important and you may be difficult to replace, or it may take a long time to replace you, if it's even possible. In those cases, sometimes employers or business partners do have life insurance policies on you, the employer, etc., etc. Must my beneficiary have an insurable interest? So your beneficiary, the person who will collect the death benefit, essentially, do they have to have an insurable interest in your life? You can pick anybody to be your beneficiary. If you buy a policy on your own life, you are the owner of that policy. You can name anyone. You can name your estate, family member, charity, friend, or in this case, you can name a perfect stranger if that's what you want. Next slide. All right, what about companies that advertise no physical exam? So I'm pretty sure we've all seen these commercials. Call us, life insurance, no physical exam. What does it mean? Well, no physical exam is what it means. There's no physical, but they might ask you some broad health questions, which you need to answer honestly. So there might be a form, there might be questions to answer, but nobody's going to come out and take your blood pressure, etc. The insurance may be more expensive than if the company required a physical. Okay, why? Because they know that they're taking a chance with potentially higher risk individuals. So while it might be easier to purchase a product like this, you might be looking at higher premiums. Next slide. And some of them say you cannot be turned down. So the first example, no physical, but you still have to answer some broad questions, right? What does that mean? You could be turned down. If they were like, okay, so these certain medical conditions, we're not accepting anyone. Okay, you could still be turned down. But some of them do say you cannot be turned down, and they mean it. You're not going to be turned down. But what is the catch? These are considered what are called guarantee issue policies. Can't be turned down. They're not going to ask you any health questions. They're not going to have a physical. Just like with the other, no physical, these companies know they're taking a risk too, because people that are in bad health could and will purchase their policies. So now you're looking at probably even higher premiums. The companies are going to balance that risk by charging higher premiums or by limiting the amount of insurance you can buy. Sometimes the premiums can be almost as much as the insurance benefit paid to the beneficiary. Well, if you pay that premium long enough, it could be more. So be sure that you clearly understand the policy and speak to a financial advisor if you do not. Just know, if it just feels easier, you might want to think about it, because it's easier to not get the physical. It's easier to not answer all the questions, but you really need to consider what that's worth to you. Next slide. So some frequently asked questions about term life insurance. Why is term life insurance often called temporary insurance? Well, because to an extent, it is temporary insurance. It only lasts for a specific period of time. Okay, so maybe it lasts 10 years, 20 years while you have the job that you have, but it's temporary. Next slide. What do I get when I buy term life insurance? You buy and you receive the company's guarantee that if you die during the term of the policy, it will pay a death benefit to your beneficiary or beneficiaries. That's what you get with term life insurance. There's not a cash value. You're only paying for the insurance part, and that is what you receive. Next slide. So do I get any benefit if I don't die during the term of the policy? No. And if, the policy ends, the policy ends. Next slide. Okay, so, again, with term life insurance, the policy ends, the policy ends. But term life insurance makes sense to certain people at certain times in their life. I think it's important to remember you get the most insurance for your premium dollar. All right. So if you need $1 million in life insurance because, you're 35 years old and you have kids and this is what you would need to replace your income, it's unlikely that you're going to be able to find a permanent life insurance policy that you can afford. It makes sense when you need those large amounts of money. In many cases, people look to term. So let's talk about permanent life insurance. Some frequently asked questions. I understand my permanent policy would be fully paid up at age 65. What does that mean? So you bought a permanent life insurance policy. They said fully paid up at age 65. So you're thinking I'm paying the premiums till I'm 65 and then I'm done. So that means that you have made enough premium payments to cover the cost of insurance for the rest of your life. The company plans to use the cash value to pay premiums until you die. If you take out the cash value, there might not be enough to pay the premiums. So let's say that you bought a simple whole life insurance product and they said you are fully paid up at 65. You made your payments, you're 65. As long as you do not touch that cash value, you should be fine. If you do buy, Latia asked, you can borrow, correct, Latia. If you start to use that cash value, number one, you're going to be paying that cash value back. But number two, you're going to be potentially making more premium payments. So as designed, fully paid up until 65, unless you start utilizing that cash value. So something to think about. Next slide. What happens to the cash value in my policy when I die? It depends on the policy. Read your policy carefully. Under the terms of some policies, the insurer pays only the death benefit. Okay, that's not going to make a lot of people happy. Make sure that you read your policy. So, you had $50,000 in cash value, $100,000 policy. The policy might say, your beneficiary gets the $100,000 and we keep the $50,000 in cash. Make sure that you are purchasing the life insurance product that you want. However, many of these whole life permanent policies will pay both the death benefit and the cash value. It's important to remember that regardless, any loans that you've taken out, including interest, that you've taken out against the policy will be subtracted from the death benefit. The result is that your beneficiary could wind up with less than the face amount of the policy. So be really careful when you're considering if you want to use that cash value. And Latia asked, can I add a term to it? If you're asking if you can have a permanent life insurance policy and a term life insurance policy, yes, absolutely. Okay, yep. Next slide. So an insurance producer has suggested that I buy term instead of whole life. Okay, so you're working with an agent or a broker, and they're looking at your situation, which is, not like anyone else's. and saying it makes sense for you to purchase term instead of whole life because the whole life product would be more expensive. Does it make sense to buy term and invest the difference?
30 days का नहीं रहता कि सिर्फ एक बार होता है ना सर 30 days return guarantee रहती है.
Hold on one second.
Then hey, I just got it last month within 30 days.
So it can. Okay, it definitely can. It depends on your circumstances. Factors that you should consider as you get older, term premiums increase. By investing the difference, you could use the investment to pay the higher cost of insurance in the future. And if your health deteriorates, you might not be able to buy a new policy. You might wish to consult a financial advisor when making this decision. I think it's important to say here that, you know, not everyone needs life insurance. That is true. Some people need life insurance for 20 or 30 years out of their lives. Many people get to a point where they have the money set aside that they would need for final expenses, and leaving that money to someone to take care of final expenses and not having anyone dependent on your income anymore. In many cases, at a certain point in life, people find themselves, you know, not necessarily needing life insurance, depending on your situation. So that's just an FYI. Which one is best for infinite banking? I don't understand the question, Lutia. I'm sorry. Next slide. Factors you may want to consider when shopping for a policy. All right. Determine what you want the life insurance to do. Why are you buying life insurance? Because it shouldn't be because somebody told you that you have to have life insurance, or because, you know, you have this sense that everyone has to have life insurance. Okay. Really understand why you need life insurance. Do you need life insurance for final expenses because you don't want to make that a burden on someone else? Will the death benefit be used to offset the income you previously provided, right? And that's when you generally need those larger amount of life insurance, like you're raising kids, etc. How many more years are they going to be dependent on your income? And then how much coverage will you need and how much can you afford? So be realistic about where life insurance fits into your budget. You know, you need food, you need medications, etc. Be realistic about what you can afford with regards to life insurance. Next slide. Factors you may want to consider. Is it possible the premium will increase? And if so, will you be able to afford it in the future? So talk with that agent or broker or your financial advisor about these potential premium increases and what that might look like. You know, they might need to give you several examples of what that might look like. But make sure that you're not just thinking about today. Make sure that you're thinking about those premiums in the future and to the best that you can do, because, you know, it's hard to know what our income is going to be in the future, but to the best of your ability, understand where that's going to fit into your life for the entire time that you're going to be paying for this life insurance product. Think about if the policy requires medical underwriting. Okay. So, you know, like we said, some don't require medical underwriting, but you might be looking at higher premiums if you decide to purchase one of those policies. Does the policy include a waiting period? Some do, some don't. Find out about that. Next slide. If you are considering canceling an existing policy, make sure you understand the consequences. So make sure you understand the consequences of canceling your policy. If it's your idea, you've done your research and you know that this life insurance product isn't working for you and for yourself and for your family, etc., you need something else. Great. If you're feeling pressure from somebody selling life insurance to cancel your product and buy another one, then that's when you really need to stop and do your research. I mean, they might be giving you great advice. What you have might make no sense to you, and what they're talking about might make perfect sense. But you need to make sure that you have come to this conclusion on your own. You need to understand a life insurance product enough that you thoroughly understand what it is that you're purchasing. And if you don't understand it, then you need to look at something simpler, or, just get some education and make sure that you're not purchasing something that is going to confuse you. Talk to a trusted family member. So you may have a family member in your life or a close friend that really understands insurance and can help you. But there's also talking to a professional, like a financial advisor, etc. Next slide. Next slide. All right. Oh, and Latia, yeah, sorry if I didn't understand your question. You can go ahead and clarify it if you want. So older adults are often targets of insurance fraud. Okay. That's unfortunately a fact. So make sure that you're careful. If you are an older adult, if you have one in your life, make sure that they're careful about life insurance and health insurance decisions, again, because they can be the targets. When somebody contacts you unsolicited, be careful. Most people already know that. If somebody selling insurance is using high pressure sales tactics with you, somebody selling you life insurance wants to tell you that it's a last chance deal or it's a limited offer, there's no place in that. Shouldn't be a part of the process. Life insurance decisions are decisions that you need to make carefully and slowly and with all the information. And if you feel like somebody's pressuring you to make the information to make a decision quickly, you should probably move on to someone else to get those questions answered, and another agent or a broker to purchase your product from, because you do not need to be making this decision under pressure. You need to be carefully making this decision. You need to be really thinking about what you're doing. And we all know how someone applying pressure makes us make poor decisions, and you don't want to see yourself in that. So in that case, I would say somebody pressuring you, last chance deal, etc., really consider walking away. If they're attempting to pressure you to sign forms without reviewing them, that's another red flag. Review those forms before you sign them. Next slide, please. All right. So older adults are often, right. We're still talking about this. So be wary of a salesperson or a telephone caller. All right. If somebody is urging you to cash out your life insurance policy for another, which we already touched on a little bit, just be careful. You might be working with somebody who is giving you the best advice possible, but make sure that you understand the consequences of canceling that life insurance policy, ending your current life insurance policy, and purchasing a new one. So generally with both life insurance and annuities, they're worth more the longer you keep them. When you change to a new policy, you might lose money. You might be charged a penalty. Just make sure that you understand what it's going to cost you, what the tax consequences are going to be, etc. Again, cashing out something like that it's just a decision to take seriously. Don't take it lightly. And if somebody is pressuring you to do it, you may really seriously consider walking away from that situation. Next slide. If somebody calls you and they claim to be from Medicare or Social Security or another government agency, unless you have contacted that government agency, that's a lie. Don't fall for it, please. An insurance producer or a broker, an agent or a broker who claims to be associated with the government is breaking the law. So be careful. If you pick up the phone and somebody says they're from Social Security and you're not expecting a call from Social Security, that's a huge red flag. If you're working with an insurance producer who wants to sell you a package policy, okay, so you sat down to talk about life insurance, and now you're talking about, you know, disability insurance and some extra health insurance and other insurance products bundled together. Okay, it could be exactly what you need, but chances are they could be duplicates of things that you already have. So make sure if it's a package policy that you are not duplicating something that you already have and that you're actually paying for things that you need. Next slide. All right, you are encouraged to report insurance fraud activities to us. We know they're out there. Our 800 number is here, 1-800-846-4069. And consumers may also email fraud referrals to the email address that is listed on this page. So this is just an FYI. If you suspect insurance fraud, you can contact us and you don't need to give your name. Next slide. All right, another thing, a viatical settlement. Viatical settlements are the written agreement for the sale of life insurance to a third party. The owner or the certificate holder, who's the viator, sells the policy for an immediate cash benefit. On the right-hand side is our little brochure that we have on viatical settlements. If you are considering selling your life insurance policy, take a look at this brochure for the details and contact us if you have questions. Next slide. At one time, most of the viatical settlements were for people facing a life-threatening illness. So they're facing a life-threatening illness and they needed the money or they wanted the money now. However, now individuals who are not facing a health crisis may sell their life insurance policies to obtain cash. That's an FYI. This is something that you really need to understand before you get into it. I won't go into it. It could be a presentation all on its own. I won't get into too many details, but the information is available and I do encourage you to email me if you have questions. Next slide. All right. If you find yourself in a situation where you know a loved one who has passed away had a life insurance policy, but you don't know where it is, you can check their bank accounts and their bills for evidence of an existing policy. We encourage you to check safety deposit boxes and online accounts. You can contact the insurer directly if you find any information. If you are missing contact information for the insurer or that company is no longer in business, you can contact us for assistance at the MIA. Next slide. But oftentimes, and unfortunately, that search doesn't lead anyone anywhere. They thought there was a life insurance policy. They can't find anything. There's billions of dollars in unclaimed life insurance money out there. So this is definitely a thing that many people experience. So if your search has not uncovered any leads, you can follow these links to the NAIC Policy Locator, the National Association of Insurance Commissioner Policy Locator. This is a service that is free of charge. You need to have as much information as possible. You need the legal name, the birth date, and the death date, and the social security number. You can't do a search without those four things: legal name, birth date, death date, and social security number. But beyond that, any more information, the more information, the better. Old addresses, old names, etc., prior legal names, all of that information will help the NAIC search narrow it down, and it will increase your chances of being able to find that policy for you. So just remember, again, this information is on our webpage. This information is on the National Association of Insurance Commissioners webpage. Or if you find that yourself in this situation, grab my email and I can send you the link. Next slide, please. All right, so again, it's important to understand the life insurance policy that you own. Understand what you're buying, understand what you have. Read your policy carefully. Review any updates or changes. You get something in the mail, it says important, from your life insurance company, read it. If you get a statement in the mail, bunch of numbers, you're very confused. It's tempting to set it aside and never look at it again, but don't do that. Just keep it on your desk and keep it out until you have spoken to your insurance producer or you've reviewed it with somebody and you know what's going on. You don't want to end up paying for 30 years on a permanent life insurance product only to find out that you can't afford the premiums anymore. That is not a situation that you want to find yourself in. And if you avoid looking and understanding the statements that you're receiving, you can find yourself in that situation. So stay on top of the mail or the email that you get from your life insurance company so you thoroughly understand at all times what's going on with your life insurance. Next slide. All right, this is more information from us, the Consumer Guide to Life Insurance. That's that little green brochure that we saw on the first couple pages. We also have that in Spanish. We have information on life insurance for military personnel. And we have this link to information about pre-burial needs from DLLR, the pre-burial needs that is not a life insurance product. But if you're looking for that, that is the link that you will find it at. Next slide. All right, this is our contact information. And at this point, I will do a Q&A if anyone has any questions. I know there's one question in here. From Lucia, she says, I would like to protect my family and assets. I understand that whole life can have great benefits for tax deductions, such as borrowing tax-free, using as collateral, getting disability, long-term care, as long as in code rules of 7702 of the IRS code. All right, so Lucia, I understand the concept of what you're saying. So you're talking about using these products like as a financial investment vehicle of sorts in a more complex way than I can speak to you about. And so, you know, if there's anyone else on today that is thinking about those benefits of the permanent life insurance product, I know that those benefits exist, but you're going to need to talk to a financial planner, a financial advisor, etc., who's going to be able to advise you a little bit better on that. There's not much I can really say about that, but thanks for the question. All right. Any other questions from anyone? Okay, so seeing none, I'll just kind of talk about something else for a second in case anyone else comes up with anything else. Thanks for joining me today. Grab my email address. I do encourage you if you have questions in the future. The other thing that I do want to say is we're going to be back here on Thursday for another lunch with Mia. This one is going to be a resources lunch with Mia. So we're going to talk about other resources in Maryland. We're going to talk about 211 and 918. Those are phone numbers. 211 is for essential community information, and 988 is a crisis hotline, crisis and suicide hotline. And so we're going to have speakers from both of those organizations available here to help Marylanders understand what it is that they do. So that's going to be 12 o'clock, and that's going to be Thursday, the 26th again. And so there's information about signing up to receive information about future presentations. That's going to be the link that Joyce Peach just shared. And thank you, Latia. Presentation feedback is greatly appreciated. You know, if you thought this was going to be one thing and it turned out to be something else, go ahead and tell us. We do want to know how we are perceived, what we can do better to make sure that you're coming here and you're actually getting the information that you want. So presentation feedback is appreciated. Sign up if you want to attend more presentations from us. Thanks, everyone. With that, I will wrap it up, and I hope everyone has a great rest of your day. Thanks for being here.